Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 21st October 2020. In the international market, in US, investors are pessimistic on the potential for a pre-election agreement on a coronavirus relief package, but are still hopeful for a late breakthrough. On Monday, the NAHB Home Builders Index hit a record in October as buyers continued to snap up new properties, which is an encouraging sign. With the last hope of stimulus in next 48 hours, the US 10-year benchmark continues to close higher 3 basis points at 0.81 percentage points and 30-year benchmark at 5 basis points higher at 1.60 percentage points. Till mid-August, Europe was handling coronavirus situation very well, and the bond yields were rising in a hope that EU will surpass US in economic recovery, and 10-year German bonds at one point had reached minus 0.39 percentage points. But since then, the second wave of coronavirus in Europe has rattled the hope for faster, sustainable economic recovery in EU. Now, US is also not doing well in terms of COVID-19 infections, but investors have started believing that US once again, with its history to come back stronger, will emerge as a global leader even on economic recovery front. With that hope, US yields are rising and German yields are falling deep negative. The US 10-year is at 0.81 percentage points versus German 10-year at minus 0.59 percentage points. Thus, the spread between the US and the German 10-year is at 140 basis points, which is historically high. In the crude oil market, the American Petroleum Institute API on Tuesday reported a build in crude oil inventories of 0.58 million barrels for the week ending October 16 versus analysts' prediction of inventory draw of 0.24. Crude will be under pressure with this surprised build in the inventory and is currently trading at $42.90 per barrel. Crude's range for today will be $41 to $44 per barrel. In the currency market, DXY or the dollar index is at 92.98. The downward journey has started again on the hope of fiscal stimulus. Dollar index range for today is seen at 92.88 to 93.19. The rationale for this dollar fall is increasing hope for fiscal stimulus, where investors will be pulling out money from the safe havens like dollar and bonds and taking riskier bets like equities. In short, the fiscal stimulus is negative for US dollar. USD INR with a high of 73.50 closed at 73.42 on Wednesday, October 28th. Finally, USD INR touched 73.50 levels but failed to breach once again. We also mentioned yesterday that 73.30 was a strong support, and that's where the INR retreated. Again, the mathematical volatility models are working so accurately. USD INR's today's range can be 73.30 to 73.60. Night trade of the quarter in currency. So if we talk about trade of the quarter, on the back of DXY weakening, we advise our clients not to take any USD INR long positions overnight for the next few days until the deadline for stimulus package. We expect if Joe Biden wins both the White House and the Senate, there will be a large fiscal stimulus and DXY will raise towards 88 levels from current 92.97 levels. And rupee will also breach 72 levels from current 73.42 levels. Of course, RBI has to allow that. In the domestic market, the market was largely steady and the relief rally in 3 to 5 year maturity continued and recovered majorly. 522 GS 2025 closed at 520 levels from 523 the previous day. 20th October 2020's SDL auction analysis, if we do, then the first SDL auction after SDL OMO announcements was a big relief for states. 10-year SDL yields were in the range of 651 to 662. Remember, just 3 weeks back, 10-year SDL cutoffs used to be 6.83. The SDL G-Sec spread before the SDL OMO announcements had reached 88 basis points, and now it has come down to 58 basis points. A drastic 27 basis point spread compression. Thursday's SDL OMOs will set the tone, but For now, after RBI's very encouraging announcements, we at Knight Research had revised our stance on SDL GSEC spreads, and we at Knight Research expect the spreads to be in the 55 to 65 basis points range for now. But we do not see spreads compressing to 40 basis points anytime soon, and we'll wait for Thursday's SDL OMOs, the first time ever in Indian bond market history. Our recommendation was on 20th October to buy 577 GS 2030 at 594 levels, and we still maintain the same. If you haven't subscribed to our trading services or auction services or our software services, you can reach out to us on 9930307466 or research@knightfintech.com.